Instant funding has always been at the heart of what we've done at FTUK, and we've had a guy who has been smashing the market every day on a $25,000 instant funding account. What's impressive though is not his trades, it's his consistency. This is a guy who has been with us for about 3 years now and is living proof that in markets anything is possible, but there are no shortcuts. The way you have done it looks effortless, but looking back at your history at FTUK, you've been with us a long time, and it definitely looks like you've learned from all of your mistakes along the way, and you sort of become a really outstanding trader. First up, just talk to me about this account that you've just passed, because the equity curve does look absolutely gorgeous.
Yeah, really. In fact, it has not been very easy. It has not been easy at all, but. When I bought the account, and I know it's a instant funding. In fact, I look at my risk management very well, and I try very much to minimize or reduce my lot size. Mm-hmm. And then also, before I take a trade, I ensure that about 70 to 80% right before I take the trade. I don't rush into the trade. Normally, I have that challenge. I rush into the trade too early. And that is my challenge all along. And I make sure that before I take a trade, I'm sure that it will go my way. Mm. So I'm very careful about my trading strategy.
Yeah, it's interesting you talk about the scaling down the size. That is often the secret for a lot of traders to actually move through these evaluations and move through these various different prop firm challenges and accounts. The consistency comes from lowering your leverage and just taking your time. Just to give everybody some stats on this, you traded this account from the middle of November last year, the 25K instant funding account. Your biggest win was only $156, and your biggest loss was only $70. So you can see that's where you've reduced the leverage, and it's just brought that consistency really nicely into your win-loss ratio. So you've also got quite an even split as well, a 47% win ratio against a 50% losing ratio. So do you think that is potentially one of the ways that you've managed to generate such calm, cool, collected consistency?
Yes, that's what I did. I didn't rush into the trade at all, and I ensured that I check my emotions very well, and make sure that I do my analysis very well before I enter into the trade.
Mm-hmm. Now, the assets that you trade, you're a man after my own heart. I started as being an FX guy, and you are quite clearly into your currencies. We've got the Australian dollar against the Japanese yen in there. We've got the pound against the New Zealand dollar, the euro against the Australian dollar, the euro against the yen. There's quite a lot of yen, the Swiss franc against the yen as well. That's pretty much it. But what I thought was interesting about that is two questions. Why Forex specifically? Why aren't you into your indices and stuff like that? And there's one or two gold trades in there, but it's primarily foreign exchange. And also I thought what was quite interesting, I wanted to ask you, why are they all cross-currency pairs? Why aren't you focusing more on the majors like the euro against the dollar or the dollar against the yen? What is it? Was the appeal of crossing the currencies like that?
Yes, I started with Forex, and then a little indices, and then a little stock. But when I weigh out, I realized that my strength is on the Forex. And yes, my strength is on the Forex. So I concentrate more on the currencies, And then my strategy, I don't take a particular pairs, but I cut across. I look at all the pairs, the ones that falls into my strategy, then I take it.
Well, let's talk a
So
little bit about strategy then, because it fascinates me, because that mix, and from what you're saying there, it sounds like you're quite technically orientated, that you're looking for specific setups. Without giving us any trade secrets, as it were, just give us an idea of what your strategy, how your strategy functions, and then also how you've arrived at that. Because normally most traders that become successful, they've been through the mill of getting rid of so many things. I mean, a guy that taught me trading many years ago said, learning to trade is really a process of extraction, because you get presented with all this information, and then slowly your job as a trader says, I don't want that, I don't want that, I don't want that. And you arrive at this destination where you've got the core tools and the core approaches that make sense to you.
yes, basically for the fundamentals, in fact, I have no idea about fundamentals.
Okay.
I don't go there. My interest is not on the fundamentals, because I realize the fundamentals give birth to the technical.
Right.
So I concentrate more on the technical. So news and the rest, I don't trade news. I don't listen to the news. I don't trade news. I'm not good at that. So I look at the chart the way it is, and then mostly I try to check tops and bottoms. High, then I sell. Low, then I buy. But of course, I'll look at my candlestick formation and the rest. So mostly support and resistance. I plot it, my support and resistance. When it gets to that point, then I check my candle formation over there. So if I have to buy, I buy. If I have to sell, then I sell from there. Then of course, I have one or two indicators that approximately gives me an idea of where to take my profit.
And are there any indicators that you specifically have like using? Have you been through a process of going through lots of different types of indicators?
A lot, so many. Even the one that I'm using now, the two indicators that I'm using now, even I've been using it for over the past 5 years, and I was not getting it. So I just had to relax, and then when I get to my tops and bottoms, then I use the indicators to test it, to see if it also indicate that I should buy or I should sell. Then I'll enter into the trade. So I take my profits at my target at the support and resistance. So mostly I just plot my highs and lows, and then when the candlesticks also indicate that I should sell or I should buy, then I check the indicator also. What is the indicator also saying? Then I just follow suit.
And how do you then get involved in a trade in the market? Firstly, how do you then decide to click the button to get involved? Do you put limit orders on? Are you a sort of like, you analyze the market, you get your setup, and then you put a limit order away from the current price and just set and forget and walk away? And then if it happens, it happens. If it doesn't, that's a popular way of people trying to sort of manage their emotions. Or do you see the setup and say, okay, now's the time to enter, and then you actually go in manually? How do you see that?
Yes, normally I'm a swing trader. I don't sit by the PC because I work. So I just look at the charts and then monitor it. Then I said to myself, around this time, this day, it can go up to this point. So every day I'll be checking where it gets to. So when it gets to my point that I have to enter, then I just enter. I don't put limit orders. I don't do all that. I just enter, put my stop loss, put my profit, then I leave the system.
And then from a swing trading perspective, that sort of sounds like your 4-hour time frames, 1 hour. There's a bit of intraday work in there as well. How do you know when enough is enough? Like, how do you then define the exit? Because there's lots of different ways of exiting the market. A lot of people will then just do it on impulse because they'll be watching the P&L. How do you then structure that? Do you use a different mechanism, different set of tools? Are you just purely looking at the current swing, high or low to the left of you? And how does that actually work for you?
Okay, mostly what I do is I start analyzing from the weekly time frame. Then when I come to daily time frame, I check my uh, entry point. So when it's time for me to enter, I enter. Then I scale to the 4-hour time frame. The 4-hour time frame, I limit, I just take my stop loss. I don't go further of what the daily time frame is telling me. Because mostly at times it doesn't get there, then it reverses. That is the problem I have. So I have decided that for daily time frame, I'll go to 4-hour, and then if it gets to 4-hour, it gets to a support or resistance, I take my profit there. Then market. So I don't wait to it to run to the last end. I don't wait. I just take my profit midway. At times when I look at the chart and I see that the profit that I get is enough, I just exit the trade and then look for another trade.
As I mean, they say that the exits are the things that are most important because that's how you actually make your money. Your exit is the point in the chain when you actually make your money. What would you say? You've been trading with us a long time, and it's just very clear to see how you just slowly and learned. And usually they always make the best traders, the guys that are quiet in the background and they learn the lessons well. What do you think are the hardest lessons to learn in trading, or what have you found to be the hardest things to actually grasp?
Trading is really, really very difficult. And what I have learned in trading is that in everything, I should be patient. Patience. It pays a lot. In fact, most of the times I rush into the trade and I go wrong. Rush into the trade, I go wrong. But whenever I'm very patient and I wait till the right opportunity opens and I go into the trade, no matter how small the pips are, it's okay. I take it and leave the market. But when I rush into the trade, at times I go in too early. Impatience. It costs me so much. And it has made me to lose a whole lot of accounts. So now I've decided that I should be committed and then ensure that I check my emotions very well and have a lot of patience in the trading. Because my mentor always tells me that the market is all the time available. It's not running anywhere.
Yeah.
So I should have patience. And then the little that I get and then leave the market.
Yeah, that's because it's interesting. We've got non-farm payrolls coming up on Friday this week, and I was thinking about this yesterday. There's always that compulsion to feel like you're missing out on something, and it's so easy to forget. The market does not stop spinning out opportunities. The next boss is just around the corner, and you can sit there and watch the volatility of something like non-farm payrolls, and the market's pinging all over the place, and you think that you're missing out, and you forget that next week the next opportunity is literally just around the corner.
Yeah, that is it. That is always, it's like I'm missing something out. I should enter it quickly and then go with the market, and that has been costing me so much. So now I have developed some level of patience in the market, and I'm taking it one after the other. And I hope I have not gotten there yet. And I know with time I will get there because I've been trading for the past 6 years now, and it has not been easy.
It's good to see people that actually sort of like take it seriously and actually sort of really learn the lessons and progress. It's and it just proves you are the living proof that it is possible to get traction in markets like that and do it consistently over and over again. It's really, really good to talk to you. I appreciate your time today, Patrick, and we are glad you're part of FTUK, and long may it continue. Thank you very much.
Thank you so much. And I'm so happy talking with you. Thank you.